Okay, good evening, everybody. Good evening. Good evening, and welcome to Admiral Markets Market Pulse Weekly Update number 6. Here we are for 11th of December, 2024. It's Paul here. Great to have you here joining us for our session this evening. We're in the middle of a rather interesting week. Plenty going on, plenty for us to talk about in terms of an update on the pulse of the market. As always, just great to see you here. I hope that you can all see me. Hope that you can hear me. That's always good to know the technology is working in our favour. It's great to have so many of you join us last night for our exclusive Discord webinar. And we did have it was the first time going through Discord. We had a couple of tech challenges, but that's always part of helping bring ourselves and our message to new people through new channels and new platforms, etc. Thanks to those people who joined us there. Hopefully we will have sort of an easier session this evening for us. But here we are, the weekly update number 6. As always, we'll just start with a quick risk disclaimer. You can just take a moment there to make yourself aware of it. As always, just remember that trading on margin does involve risk, and that ultimately you are responsible for your own trading decisions. As always, for our weekly update, the agenda is pretty similar in terms of what we want to be able to do is to help you understand and be able to analyze the global financial markets. We want to talk about how investors and traders can turn their analysis to their advantage, and also how can you trade and both invest with Admiral Markets. As I say every week, we do appreciate that there are people who join us or who watch the recording of our videos, that we have a broad spectrum, okay? Not only of experience in terms of people just at the start of their journey, people who've been trading and investing for a while, but also people who are on different paths. So some people would consider themselves a trader. Other people might consider themselves more of an investor, a long-term buy and hold investor. Other people like to operate in both spheres, and I do an element of that myself, and I'll share with that as we go through. But I do appreciate that we have both traders and investors who join us for our sessions. You're all very welcome here. Hopefully there's always something that you can just take away, add to your watch list, help elevate your own understanding as you go through your own particular journey. It's interesting for those of you who are joining us here for the live session this evening, how many of you would consider yourself a trader? How many of you would consider you an investor? And how many of you would actually consider you to be both, to happy to operate in both camps? Okay, you can put that in the chat box, what your own kind of particular style is. As I said, everybody's welcome here. It's great to have people here, and hopefully it'll help you in your own particular journey. For those of you who don't know me, my name's Paul. I've traded and invested for many years, traded for funds and for clients. In my trading world, okay, I primarily tend to be FX, indices and commodities. That tends to be my particular focus. I tend to be a trend trader for my longer term swing and position trades. I tend to be a shorter term reversal trader for my intraday trading and scalping. When it comes to investing, I'm very much about being intuitive about that, as opposed to being very, very rules driven in my trading. And I also like to particularly sort of focus on a couple of sectors that either I have had exposure to, or I understand, or I know myself, okay? Because I feel that I have an understanding of that. I'm happy to sort of learn about it. I'm happy to read about it. I'm happy to do the additional work that's required. So in many ways, the way I trade and when I invest is different in terms of how I start to look at understand the context, but strangely enough, in many of the ways, so in terms of the patterns and triggers, many of them are very, very similar. We can talk about that as we go through our sessions. For those of you joining us for the first time, who are just at the start of their journey and understanding their journey with Admiral Markets, okay, Admiral Markets is a brokerage that provides a wide range of financial instruments over various asset classes, and also has a comprehensive education suite, including webinars such as these to help you on your journey. As I said, there is a comprehensive education suite to help you, things like regular webinars with myself and other colleagues. There's always some live market analysis you can pick up on. As a client, you have access to the Premium Analytics portal. You also have access to the research terminal, which is both in MT5 and MT4, and lots of particular contents for education to help you, regardless of whether you're a trader or an investor. If you particularly look to focus on trading, well, Admiral Markets provide over 4,000 available instruments as FX and CFDs and commodities, indices and stocks, providing the standard leverage for retail clients, providing you access with MetaTrader 4 and MetaTrader 5 and Admiral Markets' own Supreme Edition. And there is also the Admiral Markets mobile app for those of you who like to trade whilst you're on the go. If, on the other hand, you're more focused on the investing pathway, well, as it says there are over 4,000 available stocks and ETFs that you have access to. You can also engage using fractional investing. You can also set up auto invest in the mobile app. And once again, for terms of platforms, you have MetaTrader 5, WebTrader, and also the Admiral Markets mobile app. And this is what you will see from myself. I've kind of talked about it a little bit myself in the past, is that because I have separate rules and separate ways for operating when I'm Trader Paul and when I'm Investor Paul, that is why I'll have the MT5 platform for my investing and the MT4 platform for trading. It's almost like it gives me rules and boundaries between, as I said, between when I'm operating as Trader Paul and when I'm operating as Investor Paul. And I find that helps me in terms of just having a kind of just having an educated approach into how I engage with those markets. So far this year, what you'll see is in terms of the technology that is provided, for Admiral Markets clients, you'll find that there's now a research terminal for MT4 and MT5, and I'll have a little look at that later. There's a web terminal MT5. There is also a VPS that you can access, as well as an investing calculator that is available in the dashboard itself. So there are always technological solutions that are being added to help support you in your journey, whether it be as an investor or as a trader. Okay, so the weekly update is all about helping traders and investors keep on top of the myriad of events that are going on in financial markets at all times. And as I said right at the start, this week is an eventful week. There's an awful lot going on, so there's plenty for us to talk about, plenty to make you aware of. And then we're able to actually have a look at the markets themselves, and see how they're particularly setting up. So, as I said, the weekly webinar is which we focus on how to navigate through these global markets and filter some of the information that comes our way. So we always have a look at the major themes affecting markets this week. Very often that is driven by the news flow, whether that be from the economic data calendar or whether it just be from geopolitical events occurring around the world. That leads us into having a bit of a market analysis of the major global markets that we can, happy to share my own ideas and thoughts with you. We'll always have a discussion about trading and investing, or if there's particular topics you'd like to see me touch upon, or actually discuss. Very happy to take that on board. And as always, I'll share with you just some of the tech solutions provided by Admiral Markets. The whole idea is to help educate you and provide a bit of insight on markets, so that way that both traders and investors can take away and help you in your own journey. Okay, so as I said, we always like to talk about the themes for the week ahead. And when I talk about the themes for the week ahead, as I say, here we are on a Wednesday evening, so I'm always looking from here till next Wednesday. So we're prepared to know. If you're at the start of your journey, I always say to people, I don't expect you to be able to analyze the economic data that comes out, across the news wires every single day. But it is important for you to know when the really crucial news is coming out, because invariably that will help induce volatility into markets, okay, when that major news is coming out. And so regardless of whether you're a trader or an investor, you need to know when that major news is coming out, because you might need to plan around it, okay, either in terms of your positions running into it or when you're executing positions after the particular news. So as I said, there is a constant stream of news every single day, and I do appreciate, if you're very new to the journey, that it might appear overwhelming or a bit intimidating. So I always try and pick out, the sort of the major pieces of news that are coming out for the week ahead, so that you can add them to your watch list and basically just be aware of them, right, and see how they're going to affect markets when we take a look at the live markets in a moment. So what have we had today? Well, we had today, not only did we have the American CPI data, which was as expected, but it's still pinging up, okay, from where we were a few months ago, which has an impact onto, as you can see, 0.14 there next Wednesday. In fact, at this particular time, we have the FOMC statement from the Federal Reserve in the US. And the majority of people are expecting an interest rate cut at that event, but invariably the CPI data coming out that came out early this afternoon and one or two other bits of US data might have an impact, okay, in terms of the confidence that traders and investors have in what, if any, rate cut we get next week. But we certainly got a rate cut from the Canadian Bank of Canada this afternoon. Not only did we get a rate cut for 0.5%, okay, just looking at from 3.75 down to 3.25%, but also we got sort of the hint of a dovish stance that the Bank of Canada came out with. And what we'll do is we'll have a little look at how that played out on the Canadian dollar in a moment, because I think it's a great way to be able to see when the news comes out and actually how the market reacts to it. Tomorrow is another busy day, the 12th. So first off, we have the SNB, okay, the Swiss National Bank. They've got their policy rate announcement as well, and most people are expecting them to make a cut from, I think, a 1% to 0.75%, a 0.25% rate cut, and that'll be tomorrow morning European time. And of course, that's naturally going to have an impact on the Swiss franc. Later on in the day tomorrow, then we have the ECB meeting, European Central Bank meeting, rate statement, and most people are expecting a cut there by Miss Lagarde. The question will be, most people are expecting a 0.25% interest rate cut, but there could also be a possible sort of possible message or possible story or a possible confidence for them to make a 0.5% interest rate cut. So people will be intrigued to hear A, what the cut is, B, in the press conference afterwards, what Ms. Lagarde has to say for herself. So as I said, these next 24 hours are going to be quite busy. We also have US PPI. Okay, we had CPI today. We'll have PPI tomorrow afternoon, Western European time. Friday, we have GDP numbers, okay, for the UK at 7 o'clock London time. Once again, people will be interested in that to see what, if any, impact the new Labour government has had in the UK, all right? I think it might be a little bit early for that, but basically people will be looking to see if there is a trend starting. So that's for the kind of next few days of this week. And then we get into next week, the start of next week. You normally hear me say, Mondays in terms of economic data is normally very light. Okay, it's normally very quiet, very little comes out. But this week, okay, or next Monday, we have quite a bit of interesting data coming out. All right, so we have on Monday we have the French PMI, the Purchasing Managers Index data. We've got the flash data for both services and manufacturing for France, Germany, the UK, and in the afternoon the US. That's all very, very interesting. You hear me talk about. If you're new to your trading journey, PMI data is a good starting point in terms of getting to grips with understanding economic data. Why is it a good starting point? Well, because even though it's a lagging piece of data, it gives us an indication of sentiment. And part of that is it's easy to understand, all right, for new traders and investors. Namely, PMI is all about the number 50. If the number is printed is above 50, it shows you that part of the economy is expanding. If it's beneath 50, then it's showing you that part of the economy is contracting. So it's a very quick snapshot, okay, on the state of the economy. And as I said, that feeds into the kind of the sentiment, into the narrative about those particular economies. So Monday promises to be quite an interesting day in terms of the economic data. We've also got more UK data coming out. So Tuesday morning, it'll be 7 o'clock London time. We have effectively the jobs numbers for the UK, and on Wednesday morning, all right, 7 o'clock same time, we have UK inflation numbers. And once again, whilst the focus from the Federal Reserve is more switching towards jobs over interest rates, it is still basically a key message, okay, a key piece of data that people are looking at both in the US and globally to understand, is there an opportunity for almost like a second wave of inflation? All right, certainly, as I said, US CPI this afternoon, it came in as expected, so it wasn't really a shock, but it was still ticking a little bit higher. Okay, it was as expected, but ticking higher than where we were a few months ago. So of course that has an impact into how is that going to drive Mr. Trump and his team's decisions, and also the decisions for the Federal Reserve. In the same way, next week when we get the UK CPI data on the morning of Wednesday the 18th, that in itself will have an impact, okay, in terms of, once again, people looking at the sentiment, okay, and the narrative around the new Labour government. And then, as I said, on Wednesday evening, okay, pretty much the same time is going on, and maybe what we'll try and do is we'll try and watch around that as part of our session next week, is basically just looking for the Federal Reserve's FOMC statement, okay, and seeing what, if any, interest rate cut there is next week. So, as I said, this week has already been interesting, and as you can see, for the next week, we have a huge amount of data coming out. And then generally after that Federal Reserve piece of data next week, well, what will happen is it'll start to sort of slow down, okay? It'll start to quiet down as people start to effectively start to take time off for, certainly here in the West, towards the Christmas holiday season, okay? So it's like we're going to have a really busy week coming up, and then basically it'll quieten off to the new year. But lots to watch, okay? Lots to keep an eye on. As I said, there's always tons of data coming out. But one of the reasons for our weekly update is to help just traders and investors just look at which is the data you should be looking at, okay? Which is the data you should be taking on board, and why is it important? And most importantly, how do I turn it into an opportunity? That's what we're always looking at. As always, okay, I make no excuses. I always like to set expectations, set our standards high, all right? Whether you're a trader, whether you're an operator, whether you're operating as a scalper, or you're operating as a position trader, or whether you're a long-term investor, set your standards high, okay? I always like to set those standards high. You are running a business, okay, and you should treat it as that. So remember, as always, risk management is absolutely key, okay? Always on it. Those who've known me for many, many years will know that it's the first thing I bring to the party, okay, is managing risk. Because if you're not managing risk, everything else is pretty much by the by, okay? You need to be right on top of managing risk from day one. As we've just looked at, know what news is coming out for that week, but also for that day, for that session, if you're a shorter term trader, where possible, especially for the investors, where possible, conduct your analysis before making decisions. You can understand that in a couple of different ways. One of the ways is, so for example, even though I can be an intraday trader, I like to do the majority of my trading analysis at the weekend when markets are closed. I love the weekly charts, okay? I trade across the board, but I love the weekly charts. And at the weekend, markets are closed. I can take about 90 minutes to do all my analysis. And it means the markets are closed. I'm not distracted. I'm left in peace and quiet. I can do it so that during the week, I'm in a place to actually execute my plans, all right, based upon the analysis I've done. And that's the same for investors, I'd say. For long-term investors, take your time, do your analysis, okay? What you don't want to be doing is you don't want to be getting bounced into making knee-jerk, impulsive decisions based upon one bar, okay, or one piece of snap information, okay? Have your plan and then look to employ that and work with that. It goes without saying, I've experienced it, okay, and I'm sure you have as well yourselves. Make sure you've got good internet connection and make sure you're well rested and prepared for your session. And just remember, it's just also kind of one of the logistics elements is that for longer term trading and investing, we are looking to be long only buyers through the Admiral Markets Investor MT5 platform. All right, so trading, I might buy and sell, right? But as investing, I'm just looking to be long only, whether that be as a position trade that might run for weeks, days, months, maybe even a year, or longer term, okay, longer term buy and hold investors. So, as I said, every week, I just want to set the expectations correctly for everybody, so that we're all operating from the same baseline. And when we look at my charts, okay, my charts are quite simple, all right. Green or blue bullish candles, red bearish candles, a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. And I also have fractals, which are the little grey triangles that you'll see. Occasionally, I might have one or two other indicators on, but as a general, this is what I work from. Very much a case of less is more. Okay, less is more. I want to be able to make decisions, and I find that the more and more indicators you have on a chart, the less likely you are to make good, strong decisions. Okay, so just so, as I said, setting expectations and letting people know how we're operating. Okay, and just remember, okay, because I appreciate there's probably lots of people who understand Admiral Markets as a trading brokerage, but you still have the opportunity to have an investing account from Admiral Markets, as it says that you can open an invest.mt5 account, log into your dashboard, either open the web trading platform, or as you'll see, download the MT5 platform, and you can operate in UK shares and click the symbol, okay, to open a price chart, and then just engage with that as you would normally. Okay, so with that in mind, why don't we switch across to the charts, ladies and gentlemen? Let's have a look at what's been going on. So if you can just bear with me for a moment, I'm just going to switch across to the charts, and then we'll go through. So just bear with me one moment, please. Okay, so here we are. I'm hoping that you can still hear my voice. I'm hoping that you can see my charts here. What we'll do, as always, let's just, this is on my dollar, but I'm actually going to start with, which one might be the best one for us? Might be the indices. I have a few different ones to basically look at our charts on. Yeah, okay, this will do us. Okay, so here we go. Opportunity for us to start here. Just start with a big picture view of the major global markets. Okay, I think that's always a good starting place. Give us an opportunity to understand what is happening. So, just for those you can see at home, this is Admiral Markets MT4 platform. Remember, I tend to use MT4 for trading, MT5 for investing. It helps me, all right, in terms of having boundaries, okay, silos in which I operate. So I have here, this is Dow Jones 30. Let's maybe just make that color a little bit better so people can see. So we've got Dow Jones, okay, 30, Dow 30, the S&P 500, Nasdaq, ASX, Hang Seng, Nikkei, FTSE, and the DAX. Okay, so a bit of Asia, the Americas, a bit of Western Europe. Okay, so we can just, as I said, use it to take a snapshot. But as you'll hear me talk about, is that and maybe this is just my view, is that you'll probably see that an awful lot of the indexes are quite similar in the way they operate, and it's almost like we're moving to one big global index because of the proliferation of algos, computer trading. Okay, that's why a lot of them look the same, and certainly when we look at the American indexes, okay, here, okay, Bosch. Okay, so if I look at those three American indexes, okay, so the Dow, S&P, Nasdaq, well, then you can see that basically those American indexes are, for the most part, they are still in a bullish uptrend. As I try to say to new traders, new investors, regardless of the news, okay, and there's always plenty of news coming out, and I mean both economic data and also just watching financial media if you choose to do that. There is always plenty of news coming out, but ultimately, the price is the price, okay? You have to look and do your analysis on the charts, and if the charts are in a strong uptrend like they are here, why would you fight that? Okay. If you're a new trader, a new journey, don't look to fight it. Look to find, is there a way that I can take part, that I can take a piece of that trend as part of either whether trading or position trading or investing. Okay. Don't fight big trends. There's literally no point to that. Okay. No point to that. And if you are finding yourself fighting big trends, well, then my advice is you need to spend a little bit of time in a bit of reflection, all right, upon your trading records and go a little bit deeper into yourself in terms of understanding why you're doing that. Okay. But as always, all right, there's always, there's a story to be told, and we can have a little look at understanding. And what I'm curious about is we can see here that the Nasdaq, okay, over the last week or two, and even this week, has closed at new highs, is pushing to new highs, as is the S&P 500. Okay, it closed the last couple of weeks, but the Dow has been a little bit has not been following through there. Okay, all right, even though we are still in, we're still in the big here we go, in the big uptrend, and let's just bring this out a bit here. And if I look at the Dow on on the weekly chart here, as I said, I do a lot of my work in the weekly chart. That has still been in a beautiful trend. And what we have seen is lots of bounces there, okay, this year off the 20-period moving average, all right? And that's one of the reasons I have these on. That's one of the reasons I like to work. Basically, I like to sort of buy pullbacks, okay, in trends. That's my ideal way of operating. When I look at the Dow here, okay, a couple of weeks ago, we pushed to those highs, and that's fabulous. This week, and so far this week, okay, we've come off. Remember, we're only Wednesday evening, sorry. So we've still got a couple of days to work out. I'd be looking at this swing point here. That's what I'd be looking at, until I see that sort of basically worked its way through, okay, by which time the 20-period moving average, I'm still bullish, okay? This is very possible that it can be a pullback, okay? It's too early to say it's a reversal, okay? But I'm intrigued that it is not operating in the same way as the way the S&P 500 and the Nasdaq is. So I'll just be keeping an eye on this, okay? I'll just be watching this to see how this particularly plays out. If I look at the daily chart yesterday, okay, got beneath the daily 20. I mean, if you look at that here from last month, this is the daily chart. We had a beautiful bounce there off the 20-period moving average there. That's my bread and butter trade, all right? That is my bread and butter trade, okay? When I see bounces of 20-period moving averages or 50-period moving averages in a strong trend, that's my trade. But, we've broken through as I said, on the daily, we've come through and closed beneath the 20. But as I said, that can actually mean, it's just a pullback. This could be just people starting to trim their positions in front of the holidays, in front of the Federal Reserve FOMC statement. Okay, just basically getting ready to sort of bank a few bits of profits. Okay, and the big institutions, that is, right, before the end of the year, so they can claim their bankers' bonuses next month, etc. So I'm not exactly I'm not jumping up and down, but I'm watching it, okay, and keeping an eye on it, okay, to see how that particularly plays out. Because as I said, you can see the S&P 500 and the Nasdaq is still pushing very, very nicely to the highs as well. If we quickly look at Asia, well, Hang Seng isn't really interesting me that much. I don't trade it a great deal. I'll just like to have it as an idea, as one part of getting an understanding of Asia. My view here, okay, on this is the weekly. Price has been using the 200-period moving average there as dynamic resistance. We can see it's using also the 20-period moving average as support. The 50 is holding up. So from my view, price is now coiling up, okay? It's tightening up. Is that tightening up because we're getting towards the end of the year, or is it the tightening up before we're getting a breakout of some sort? Truthfully, I don't know. Okay, I don't know. All I can do is go with what I see there on the charts at the moment, and that's what I'm seeing. That's what I'm looking at. And so, when price is coiling up like that, I just basically let it coil up. Sometimes it's very clear which way it's likely to break out, but lots of other times it isn't. It isn't. I can see it's coiling up. but I don't really have any kind of bias in terms of the way it's likely to go. And that's fine. I tell you that because I appreciate when you're at the start of your journey, you think that you have to understand and know every little bit of every chart. The truth is, you can never. All right, you can never. It's fine if it's coiling up, and I don't have a bias. I don't have a view on which way it's likely to go. Then I just let it break out, do its thing, establish a new trend, and then I'll look to join that new trend when it sort of takes its place. And once again, no need to be a hero. No need to fight the market. Let the market do its thing. You hear me say it all the time. Think of yourself as like a surfer. All right. Think of yourself as like a surfer. You are looking to surf the best and the biggest waves, which means you're not trying to jump on every wave. Okay. You're taking a bit of patience, a bit of time, letting the market play itself out so you can choose how to engage better. For Hang Seng, as I said, I'm not massively interested in that at the moment. If I look at Australia, the ASX, once again, that has been on that weekly chart, a great trend that has found lots of support in one way or another at the 20-period moving average. What I'm intrigued here, this to me is, that's what I would call, a diamond. All right, although this week hasn't finished yet. But if it was to finish like that, I'd be looking at as that it's a bit of a diamond. Basically it's a broadening with a coiling formation there. And I'd be looking to see, how does it break out of there? Are the people just taking profit at the end of the year and we get a drift down? That's what I'd be curious about. Let's just have a look at the daily charts. Yeah, so that's what we're looking at. Okay, not massively dissimilar to the Dow, is it, in terms of the daily chart? Has been down about the 20. Okay, but yeah, it's. I will just be watching this. Okay, it's still bullish. I'm not bearish in terms of strategically bearish on that. Okay, it's still a bullish uptrend. All right, but I'm wondering whether we're going to take a little break there just as we run in towards the end of the year. Interestingly, if I look at this is the Nikkei on the charts. Let me just draw in here a bit. I had been sort of viewing this. Okay, I think we might have even talked about this last week, perhaps, about how there was possibly a big picture of a head and shoulders formation building. But what we were looking at, as I was saying, I was looking at prices here is coiling, a bit like Hang Seng has been coiling, looking at how the 50 is acting as support there. And we had, a resistance line, a weekly resistance line, which, as you can see, this week, so far, we have broken out of. Now, remember, this is Wednesday evening. It's perfectly possible it could break out, false break out and close back in the range by the end of the week. It's a weekly candle, okay? This is why when I'm operating off weekly charts, I like to do most of my analysis at the weekend when the market's closed. And one of the other reasons is if you do like weekly charts, like I do, the weekly close is very important. All right, the weekly close tells you an awful lot, all right, about that particular market. So, whilst I'm interested, let's just get rid of it. Whilst I'm intrigued and interested, all right, I won't really give it any credence until actually how that candle closes. All right, we've still got a long way to go. Still got a long way to go on that. Okay, so we can do that now. Let me just. One of the things I'm curious about is this was the high earlier in the year. It became a false breakout, which became a very nice evening star formation. So I wonder whether kind of that level there, which is around about 41,000, I'd be intrigued to see if maybe that becomes a magnet that price pushes up to if it breaks and holds. So as I said, I'll watch at that this weekend and see how that particularly plays itself out. A bit closer to home, for those of us on your European continent, we have basically the DAX and the FTSE. DAX, look at this, okay. You don't need to be a news junkie, all right, connected to 24-hour news to understand that there has been a great deal of political and economic turmoil in both France and Germany, the two main powerhouses for the European economy. There's been, great turmoil there, as I said, politically and economically. And in spite of that, we can see that the DAX has continued to be in a very strong trend. And we spoke about this a couple of weeks ago about how on the weekly chart, the DAX was in an uptrend. It pulled back. Okay, this is this is basically a bull flag. It's a bull flag ending, okay, with a very strong bullish pin bar. My preferred way, okay, to trade a bull flag. But even I wasn't expecting the sort of run to have been so strong there, okay. Even I was surprised by the kind of the absolute strength of that particular maneuver. And so there's a good learning point here, and one even I need to be constantly reminded about, namely that the stock market is not the economy. Okay, the stock market is not the economy. Most of the economic data and the news and stuff for Germany and for France has not been terribly exciting. Okay, it's been underwhelming. But despite that, okay, we've still managed to see that. Now, admittedly, I think a lot of that is it's been dragged north by just general optimism now that they've got the clarity on the American president, and also there's just a few German stocks, okay, who have been doing exceptionally well, and that has kind of basically dragged everybody up there. And so that's what we're seeing there. But it is still a bullish trend, okay, and it looks like it's going to close at all of those highs and stuff, etc., for the end of 2024. And it's fascinating to see how that particularly plays out. Okay, so we have that there, and then of course, last but not least, well, we're back here to the UK, certainly for myself, and we've just looked at the three American indexes. We've looked at the Australian index, okay. We even looked at the Nikkei, and we've looked at the DAX, okay. And they're all in pretty strong uptrends, haven't they? The same can't be said about the FTSE, and you probably hear me bemoan this every week, okay. Bemoan the sort of how the FTSE really has been the laggard and really has just, for the most part, okay, for the most part of the sort of last 8-9 months, has just really been in that range between around about 8,100 and 8,400, a 300-point range, and hopefully you can see that. Now, don't get me wrong, there are some people who love trading ranges, okay, I've done it myself, all right, and that is, for them, that is the joy. But if you're let's say a longer term trader, a longer term investor, well then, the better opportunities have been in Germany and America and Australia than they have been on the FTSE 100. So there's an awful lot going on with that, all right. Why is that happening? We spoke about a few weeks ago about how we had a few weeks of just sort of despair a bit after the Rachel Reeves budget. But once again, you hear me talk about confluence of events. We came back down to the 8,000 number, the 50-period moving average, an indecision candle, and then we bounced from that. And really, we've just gotten back up towards that 8,400 area. And as you can see, there's wicks there. Okay, we're only still got a couple of days to go. And of course, we've got UK data on Friday. My concern, and this is my view, all right, my concern is that the data we are now starting to see over the last month or so is demonstrating a deteriorating economy since the budget. All right, businesses slowing up on hiring. They are speeding up, okay, on drawing down, okay, their employee numbers, all of which has a huge impact. Then you also have the kind of juxtaposition, is that the right word, between the optimism that is going to be seen in the Trump's America, rightly or wrongly, whether you believe it rightly or wrongly. We'll be seeing the kind of optimism of the US, the kind of negativity of the UK coming from Starmer and Reeves. And invariably, if you are a huge global investor, where are you likely to channel your funds? Okay, you're going to channel them into the UK, which is going sideways and could even go into recession next year. Or would you channel your funds into the US? And really, that's what we've seen over that last few weeks. Is basically, you've heard me talk about it before. People being long the US, short the UK and Europe as a global picture. And I think we will see more examples of that as we get into next year and as we get into the Trump inauguration. And I think that will be just another element that weighs on the UK and might drag us down, certainly compared to those other indexes we've just looked at. So yeah, if you're a range trader, this is glorious. If you're looking for a lovely trend to take a part of, this ain't happening. It ain't happening here, ladies and gentlemen. All right. So you have that there. So as I said, I always want to have a look at the big global markets and look at, the winners and losers there and where are the opportunities. But then I also always want to have a look at the US dollar as well. There are plenty of webinars in the archive for Admiral Markets, okay, or on the YouTube channel where I've talked about trading the US dollar and about, my background was as trading at FX for a fund. So, that was my first love. All right, trading sterling in particular is is my real emphasis and my real love. But it's a case of if you're going to operate in FX markets, the US dollar is the daddy, all right, and you need to understand that, and you need to work that out. And the way I do that, as I'm sure those of you have seen before, you'll hear me talk about, is I have a dollar profile here that's set up that has the dollar index, which we'll come back to, but I've got the majors: Aussie dollar, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, and dollar Japanese yen. Okay, so that's the dollar index and the majors, and that gets me a very quick snapshot of the state of the dollar. Is the dollar bullish? Is the dollar bearish? Is the dollar awake, as in it's in strong trends, or is the dollar just basically a little bit asleep? All right, is it just kind of going sideways? So I'm hoping that you can kind of pretty much see, even just here on this snapshot of the profile. And we're going to look at the dollar index in particular in a minute, but bosh, the dollar index has been bullish, okay? Dollar against Swiss franc has been bullish, okay? Dollar against Japanese yen, for the most part, has been bullish. Dollar against Canadian dollar has been bullish. New Zealand dollar against US dollar, well, that's Kiwi has been weak. Aussie dollar against the US dollar, Aussie's been weak. Euro against the US dollar, Euro's been weak. Pound against the dollar, pound's been weak. Okay, very quickly I get a snapshot there of where's the as I said, where's the winners, where's the losers, so I'm in a position to understand, okay, where's the strength and where's the weakness, because that's the way I like to operate in FX markets. When you look at that on the weekly chart, the strength is very much still with the dollar, which we're going to look at in a moment. But as I said, that is the quick way for you to basically just quickly take a snapshot. And as I said, every week we'll do this, okay, just so you can in a position to understand what's being shown there. So let's have a look at the dollar index in particular. The dollar index in particular, fabulous run, okay? Weekly chart, bosh, all the way up to those highs. And then we came back a bit, okay? We came back a bit. We had American Thanksgiving. We're waiting for data, and if I went to the daily chart, some of you will have we sort of spoke a little bit about it last week. Is that actually, if you look at us for the vast majority, okay, of the last couple of weeks, after look at that big candle there, that was election day in the US, and then we had a nice big pump from there, and we did go to our highs here. But really, you might say for the last sort of month, almost, maybe just under a month, we have been in that kind of range there between, I'd say, between about 105.70 and 107, all right? So 130 kind of pip range there. And certainly in those last couple of weeks, that range has been tightened. Now, admittedly, we're intriguingly working our way up to the top of that range, but this is also what has an impact on commodities, all right? Well, look, I'll see if have I got a gold chart on this particular one? If not, I will make sure we do. And that has had an impact there, okay? So, we've been a little bit quiet the last couple of weeks, okay? Just once again, in a little bit of a range. People wait for CPI data this week. They'll be waiting for that FOMC statement, okay, next Wednesday as well. And I think that what we will see is, as we get into the kind of Christmas season, as we get into the end of the year, okay, we will see ourselves, I think, go a little bit quiet, see what the Federal Reserve has to say, and then people will either put on their position or take off their position, and then quieten down, okay, into those last couple of weeks of the year. So that's what I'm looking at there on the daily chart there. Now, I thought I had in here. I thought I had an element of that. Let's just, it doesn't particularly want on here. Let's just bring it up, okay? Let's just see if I can bring a chart up here, just to see, because I appreciate there's lots of people who basically love to trade gold. So I'm just going to, trade and invest gold. So let's just put it on as let's see, where should we have it here? Let's just have, maybe not. Yep. Bang, we just have it there. There we go. Okay. There we go. So just a very basic chart of gold. In fact, because it's gold, let me just change the properties a bit, just to show you how I do it. So of course, my bullish candles, what I tend to have is, not unsurprisingly, I have them as gold. Okay, so there we go on that. Now remember what I would talk about. Let me just put on my let me put my. I thought I had my. Where's my template here? I've got so many. Um, yeah, maybe that might be even better. Yeah, let's do that. Um, okay, so um, okay, so um, those will know me. I'll always say that when you're on here, you draw on your lines of support and resistance. Okay, so I'm just going to start here. This is the monthly chart. So there is a looking like a fractal that's going to be printed there. Okay, that's our most recent highs. I'll want that on there. And then looking at, this is one of the reasons I like fractals. See how fractal there, fractal there, fractal there, even a little bit fractal there. We didn't close above it, just giving an indication that, a particular level there is of relevant interest. Okay, this is what's coming on. I'm just going to basically update these so we can see right for ourselves. Yep. Okay. Now, of course, as always, the more you practice doing this, the quicker it becomes. Your eyes become sort of cognitively recognized. Now, this is the monthly chart. You can see for yourself that monthly gold has been, on a fantastic trend ever since this bullish engulfing candle at the end of last year off the moving averages. But then I go down to the weekly chart. Okay, go down to the weekly chart and just add in lines of support resistance as well. And I'm particularly intrigued in for reason. There we go. Get everywhere. I've got certain particular touches and taps there, fractals, and so the fractals help me as well. And as I go, I'll tighten them up, okay, and make them better. But I appreciate we're under a bit of time restraint here and stuff. So here we go. So gold itself. Remember what I was just saying about how for gold dollar had been for a few weeks had been sort of breaking, it's going sideways. Gold had been following through on that as well. Gold had been following that. And remember, there was a strong correlation there between dollar prices and gold prices, oil prices, prices in commodities as well. The stronger the dollar gets, the more expensive commodities become. The more expensive commodities become, the less demand there is for them. So invariably, that's the sort of relationship we look at. But in the same way that the dollar we saw, if you remember, the dollar strengthened the last couple of days, but still in the range. The gold has done that this week as well. Okay, gold has strengthened there. Okay, and we're up to the kind of this strange pivot point that we had. Okay, from last month. Okay, so once again, if I go to the weekly chart, I would look at it as we are still bullish. Okay, we are still bullish on gold. Okay, even though we're breaking sort of some structure, we're still the 20-period moving average on the weekly chart is still acting as support, isn't it? And we are at this moment for this week we are breaking through there. Okay, working our way back up to that. So that is still bullish. We've also had there was news about central bankers still buying lots of gold. So there is still as I said, if we break this fractal, okay, and hold above it, that maybe we make a push. Maybe we make a push to those highs. Okay, that previous high for the end of the year. Okay, maybe that's what we do. But certainly that has pushed its way up this week. You can see for yourself there, the 4-hour chart that has been pretty much great chart, and we've just literally, as I said, that is just this pivot from the last kind of real pivot. We've just touched there. Okay, so I'll be intrigued tomorrow to see what that impact that has on there. Remember, gold is still there's still a correlation between gold and Swiss franc, okay, there, and as I said, there will also be the correlation between, or inverse correlation between that and the US dollar. And as I said, there's an awful lot of data coming out this week. All of it could give the gold its bit of a pump. So, yeah, I would just be watching that over the next week or so. Cool. Let's have a look. What I'm going to do now is let's have a little look at sterling, and then we'll have a look at UK stocks. Okay, on MT5 to finish up. All right. So, bang. So that gives us a global markets, dollar, gold, sterling, and then we'll look at UK stocks as well. The whole idea, give you a big, nice market pulse. And look at some particular interesting pieces of data or details that are coming out. So, yeah, it's kind of it was a challenging morning as an intraday trader of sterling this morning. It was kind of a bit on the challenging side, but we're more interested here in the kind of longer term big pictures here. So and I'm just going to basically bring these up here. So we looked at the US dollar there. If we look at close to home, we've got basically um, the dollar remains strong, but we've had a little bit of a retrace, a little bit of a pullback. A lot of that is more, as I said, that dollar has just gone sideways. Okay, if we go down to the daily chart, this is a set above minor Vulcan, and it's basically, we're drifting higher. Okay, but as I said, there's an awful lot of dollar news coming out and an awful lot of UK news coming out of this next week. So, if you look at the last few days, we are bouncing back and forth a little bit, and it would not surprise me if that continued. Okay, if that continued for a short while. The way I look at this is on the daily chart is the 50 is coming down, the 200 is coming up, the 20 is starting to turn, and price is coiling up a little bit in it. So that is a reflection of people are getting ready for that sterling news, that US dollar news, and we'll see how that particularly plays out. Okay, over the next week, it's going to be, this would be a case of keeping your powder dry and waiting for the good opportunities over the next week, because I think it's going to be there will be an element of volatility for both sides, for different reasons. So watch it, but basically make sure that you're on top of your risk management there. In terms of others, well, euro against sterling is another major trade of currency. This is the weekly chart. You can see for the most part, we have been in a downtrend reflecting euro weakness and some sterling strength. We talked about it a couple of weeks ago about how, having been in a trend, the last couple of months have been very scrappy on euro sterling. We've had basically 84 and 83 acting as support, but you can see the price action there is not terribly pretty. And then we've got a little inside bar, pin bar, and we've broken south of that. And this week you can see we've pushed our way down. If I go up to the, there we go. If we go down to it, I'm looking at this level here. Gosh, let me just draw this in. Okay, let me just get this out so we can get the exact data here. So the low of that was 82.02. Okay, the low of that was 82.02 back in 2020, March 2022. I wonder if tomorrow's ECB is enough to basically flush that down, and maybe it's the kind of exhaustion flush. Okay, but it would not surprise me if we pushed our way down to that 82 level, which does surprise me. But you can see that's just a reflection of sentiment about Europe, and even though the sentiment about the UK isn't great, it is not as bad as the European one, and we'll be interested to see what comes out of that ECB rate meeting tomorrow. That's going to be very interesting. Okay? So you might want to watch and see how that particularly plays out. With that, okay, the opposite side of that is pound against the Swiss franc. Pound against the Swiss franc on the weekly chart is it's going sideways there. It's building up there. You can see there, okay, it's coiling up. I thought we might have broken out a week or two ago, but it didn't. But it's just invariably breaking up. And so remember, we've got the SNB tomorrow with their bank rate, and people are expecting a cut. And then you've got UK data on Friday, Monday, Tuesday, Wednesday. Okay, so this maybe we'll get a breakout, or maybe we'll just have a little bit of a damp squib as it just feebly runs its way towards the end of the year. Okay, some people would use pound Swiss franc as a version of a risk on, risk off currency. Okay, when risk is on, sterling should rise against the Swiss franc. When risk is off, Swiss franc should strengthen against the sterling. But it's, as you can see, it's coiling up there. Okay, it's all coiling up there on its particular move. Where has been interesting this week, before I switch across, is pound against the Aussie. We've seen sterling strength against the Aussie. Against the Canadian dollar, okay, we have seen strength there against the Canadian dollar, and against the New Zealand dollar, we've seen strength there for sterling. Okay, so even though sterling has been fair to middling in terms of its strength, that is a reflection that Condols have been weak generally. And part of that is a case of understanding, are people in a risk-off mentality? Are they moving towards that? And also the fact that some of the data coming out of China has not necessarily been terribly supportive, okay, of Condols, especially in particular. A lot of people would trade the Australian dollar as a proxy for China, but also, all of those Condol currencies, they an awful lot of their trade and businesses, of course, is with China. And so anything that shows as a lack of strength in the Chinese economy, or struggling data out of the Chinese economy, that was going to have an impact basically in weakening the Aussie, the Condols, and that's what we have particularly seen there. All right, so we've just had a look through those markets. What I'm going to do, let's switch across and have a look for the last few minutes. Have a look at here. I'm just going to switch to the Invest MT5 platform. I'm hoping that you can sort of see that. Okay, hoping you can still hear me. So what I'm going to start with is the research terminal here, which is a plugin into MT4 and MT5. It is always being developed, and one of the other pieces that we're adding in here is an additional element. Okay, using elements of AI, using elements of coding to basically to help analysis. So I have set mine up here, okay, in terms of a watch to look at when it shows up for particular sterling pairs. That's my bread and butter. That's where I like to start, okay? And you can see that invariably it will bring out data and also about what was found, okay, what it's looking at, what it's finding there. And so, this is it's a Trading Central plugin. It goes straight into your Admiral Markets MT5. As I said, you might find that particularly useful, all right, if you're looking at it. And as I said, you can particularly focus on which pairs or which stocks or indexes or commodities you particularly like to look at. You can look at to utilize that to help you if you're looking for ways to support you in your own analysis. And that goes along with all the other elements there, okay, that you can do. So you can look at most viewed bullish instruments and also the corporate calendar, okay, so that if you're a particular stock person, it can also utilize that to identify what the sort of stocks are showing up there. When I look at this, to look at a version of the UK, so VUC, all right, VUC is an ETF of the FTSE 100. So for the longer term investor, you can see that doesn't look massively different, does it, from the actual sort of FTSE 100 chart we looked at on the sort of trading platform. It doesn't look massively different. We're at the top of it, okay, but as I said, we need to see, is there something that could basically pump us out there? Certainly there has been support there. It's about whether there's anything to sort of take us higher. So that's what I'd be interested there. As I said, there are also you have not only stocks, but you also have ETFs. So I always have ones here of this is the FTSE 250. Okay, this is the Vanguard one, VMID, all right, which gives you maybe in some reflections of the UK economy. Okay, and whereas the FTSE 100 is driven by international companies, lots of those companies who make their profits overseas. The FTSE 250 and the FTSE 350 are more companies, UK specific companies, and perhaps maybe that sort of malaise, maybe the malaise that you see there, okay, as prices going sideways in that, is that reflection of businesses, okay, and market sentiment starting to interpret the new Labour government and the impact that will have. As I said, my view is it would not surprise me if we went into the recession in the sort of in the UK in 2025. And I wonder whether this kind of coiling up is part of that. We shall wait and see, and I'll keep you updated. I'll keep you updated every week. And then I look at some of the companies that I'm particularly intrigued and interested in. Just to finish up, so Rolls-Royce is a perennial favourite, as we can see there. That is the weekly chart of Rolls-Royce, and it continues, all right, to be a great opportunity for position trading, great opportunity for investors as well. If I look at we look at the 15, this is the monthly chart. We did a session a few months ago about how you could be either a value investor or a momentum investor, okay, based upon just using simple charts, and how, down here, okay, where Rolls-Royce was really at a bit of a low. We could see that was value compared to the 200 period moving average was a great value opportunity, and then that broke out of that, and then it became a momentum play. And you can see what I'm intrigued is here we are, end of the year, we're just getting towards the 200 period moving average on the monthly chart. The weekly chart, see how there's a little bit of it's taking a little bit of resistance there. So I'm going to be intrigued to see whether it can get through that. Okay, whether it can get through that monthly 200 and move on. That's what I'll be looking at. That would be a very strong proposition. All right. Or whether we see maybe just just for a couple of weeks, maybe we sort of pull back a little bit as people take profits after what has really been 2 years of fantastic maneuver. And as I said, just really has found the 20 period moving average really just quite really good, strong, solid support there. Okay, and that's one of the reasons why our moving averages in great trends are a real useful, helpful item to work with. One of the other ones I've been looking at, okay, this week is Lloyd's. Let me just go up to monthly chart here on Lloyd's. I think we talked about this maybe a month or so ago. And what I'm intrigued by is that for many years, this is the monthly chart. We'll just finish off here on Lloyd's. Is that actually, for the most part, we were in, a kind of a range, all right, for the most part, from around about 40p to about 55, 56p, and hopefully you can see that. We had broken out of that, and I was wondering whether we were going to basically see a really strong move off that. Certainly, American banks, American financial firms, for the most part, have done well in the latter half of this year, but it hasn't really followed through to into UK banks. And in particular, this big bearish engulfing candle is kind of a worrying candle on the monthly chart. And I can't help but think here if we go down to the weekly chart, that I was hoping we'd break out of this range and carry on. The 20 was acting as support, but once again, we got one bearish key reversal followed by another bearish key reversal, and now we've kind of fallen down. And I'm intrigued now. If we look at that, I'm intrigued to see how that is there. If it's the 50 period moving average, is that going to act as support? I can see the 20 is rolling over. I think maybe we're getting into a little bit of a squeeze here. Okay, there's a little bit of a squeeze between the 50, the 20, and price, and that kind of 55, 56 pence mark. Price is getting squeezed up, and so I'm going to be watching this to see how does that play out. Does it squeeze and fire higher if there's good news? Or, as I said, if there is kind of more sort of malaise in the UK economy, does that basically, push us down? So, as I said, that is on my watch list at the moment to see how that particularly plays out. Okay, and that's as I said, share with you what's on my watch list and see how that particularly looks for us. Okay, ladies and gentlemen. So, unfortunately, time flies when you're having fun. All right, and unfortunately, we've run out of our time there for this evening. I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight. Okay, that you can take away and utilize in your own trading and investing. As always, I wish you the best of success in what is a rather interesting week ahead. Remember, we just went through lots of data there. Remember, we'll be back here next Wednesday, 18th, which I think will be the last session of 2024. I hope you'll join us for that. All right, and until such time, trade and invest well, and I look forward to speaking to you soon. Take care, everybody. Cheers.